Have you ever wondered why house insurance is considered a vital investment in the USA? Well, ponder no more, because you're about to step into the fascinating world of house insurance. It's not merely an additional cost that homeowners have to bear. No, it's far more than that. It's a smart and necessary investment that safeguards your most treasured asset, your home and what's housed within it. Think about it. Your house isn't just a structure made of bricks and mortar. It's a sanctuary, a storehouse of memories, and probably your most significant financial investment. And like any investment, it needs protection. That's where house insurance steps in. It's your financial shield, ready to help you recover from unexpected events that could shake your world and your pocket. So, is house insurance intriguing? Absolutely. It's a fascinating blend of risk management, finance, and the love of home. Stay tuned as we delve into the intricate world of house insurance. So, what exactly is house insurance? Good question. Let's dive in. House insurance, or homeowners insurance, is a form of property insurance that covers losses and damages to an individual's house and assets in the home. It also provides liability coverage against accidents in the home or on the property. It's essentially a contract between you, the homeowner, and the insurance company. In exchange for your premium payments, the insurance company promises to pay for any loss specified in your policy. Now let's break down the main components of house insurance. First up, we have property damage coverage. This is the part that covers the cost of repairing or rebuilding your house if it's damaged or destroyed by things like fire, hail, or vandalism. It also typically covers other structures on your property, such as a detached garage or a shed. Next, we have liability coverage. This part of your policy covers you in case someone gets injured on your property and decides to sue. For example, if your dog bites the mailman, or if a guest slips and falls on your icy driveway, liability coverage would help cover the legal expenses. And then there's additional living expenses coverage, often referred to as AIL. This kicks in if you're unable to live in your home due to a covered loss. It can help pay for things like hotel bills, restaurant meals, and other costs you incur while your home is being repaired or rebuilt. So you see, house insurance isn't just about protecting your home, it's about protecting you. It's about providing peace of mind, knowing that if the worst happens, you won't be left out in the cold. You'll have the financial support you need to get back on your feet. Now that we've covered the basics of house insurance, it's time to delve deeper. Now let's decipher the terms policies and premiums. Firstly, an insurance policy is a formal contract or document that outlines the terms and conditions of an insurance agreement. It details what is covered, what is not, and the responsibilities of both the insurer and the insured. Essentially, it's a playbook that guides you on how to navigate your house insurance. On the other hand, a premium is the amount you pay to the insurance company in exchange for the coverage provided. It's the financial commitment you make to ensure that your property is protected. Premiums can be paid monthly, quarterly, semi-annually, or annually, depending on the agreement with your insurer. Now, you might be wondering, what determines the cost of these premiums? Well, several factors come into play. One major factor is the location of your property. If your house is in an area prone to natural disasters like floods, earthquakes, or wildfires, your premium might be higher. This is because such locations present a higher risk to the insurer. The value of your home is another significant factor. More expensive homes usually have higher premiums because they would cost more to repair or replace. Size, construction type, age, and the condition of your home also play a role. A larger, older home with a wooden frame could have a higher premium than a smaller, newer home made of brick. Lastly, personal risk factors can also affect your premiums. These might include your credit score, claims history, and even your lifestyle habits. For instance, if you have a history of filing many insurance claims, or if your credit score is low, you might face higher premiums. Similarly, if you have a home-based business or own a dog of a breed considered high risk, your premiums could increase. In essence, your premium is a reflection of the risk the insurance company perceives in insuring your property. The greater the risk, the higher the premium. Policies and premiums are the backbone of any house insurance plan. But how does one choose the right plan? Choosing the right house insurance plan can seem daunting, but we're here to simplify it for you. To begin with, understanding your needs is paramount. Each home is unique, with its own set of risks and vulnerabilities. Some may be prone to natural disasters like floods or earthquakes. Others might be located in neighborhoods with higher crime rates. It's essential to recognize these factors and ensure that your chosen plan provides coverage for them. In addition, consider the value of your home and your personal belongings inside it. If you're an antique collector, or if you have high-end appliances, you might want to look into plans that offer higher coverage limits or specific protection for valuable items. Once you have a clear understanding of your needs, it's time to compare different plans. Don't be tempted to go for the cheapest option immediately. Remember, the goal is not just to save money, but to ensure that you're adequately covered. Look into the details of each plan, compare the coverage limits, deductibles, and exclusions. It might seem like a lot of work, but it will pay off in the long run. Another critical factor to consider is the reputation of the insurance company. Do some research to find out if they're known for being fair and prompt when it comes to paying claims. Check out customer reviews and ratings. If an insurer has a history of denying claims or delaying payments, you might want to think twice before signing up with them. Finally, don't hesitate to ask questions. If there's something you don't understand, or if you're unsure about any aspect of a plan, reach out to the insurance company or consult with an insurance professional. It's better to clear all your doubts before you commit to a plan than to find out later that it doesn't provide the coverage you thought it did. Choosing the right plan is crucial, but what happens when you need to make a claim? Tune in to the next segment to find out. Let's debunk some common misconceptions about claiming house insurance. When it comes to claiming insurance, there's often a shroud of mystery that leads to a lot of confusion. To start, the process of making an insurance claim isn't as daunting as some might think. Typically, it involves reporting the damage to your insurance company, filling out claim forms, providing evidence of damage, and waiting for the claim to be processed. It's a straightforward process designed to help you get your life back on track after unexpected damage or loss. Now let's tackle a common myth. My insurance rate will always go up if I make a claim. This is not necessarily true. While it's possible for your premium to increase after a claim, it's not a guaranteed outcome. Insurance companies consider several factors when determining rates, such as the nature of the claim, the overall claim history, and even the location of the property. So don't let the fear of a potential rate increase deter you from making a legitimate claim. Another misconception is that insurance covers any type of damage. Insurance policies do provide a wide range of coverage, but they are not all-encompassing. For instance, standard policies often exclude damage caused by floods or earthquakes. These types of coverages usually require additional policies. It's crucial to thoroughly understand your policy and what it covers, so you aren't left in a lurch when you need it the most. Lastly, let's dispel the notion that filing a claim is a long and tedious process. While it can take some time, it's not necessarily a drawn-out ordeal. Most insurance companies nowadays have streamlined their claim processes and provide assistance to make it as smooth as possible for policyholders. Understanding the claim process and debunking misconceptions takes us one step closer to mastering house insurance. By busting these myths, we hope to help you navigate the world of house insurance with confidence and ease. Finally, let's discuss the broader implications and benefits of house insurance. It's not just a piece of paper with legal jargon, it's a safety net, granting you financial protection in the face of potential calamities. Imagine a fire, a flood, or a burglary. Without insurance, the financial burden of these events can be devastating. But with it, you can rebuild and recover without emptying your savings account. But beyond financial protection, house insurance gifts you peace of mind. It's knowing that you're covered, that your sanctuary, your home is protected. It's sleeping well at night, not worrying about what-ifs. And let's not forget about its role in mortgage approvals. Lenders often require borrowers to have house insurance to protect their investment. It's an essential part of the home buying process, adding another layer of security. So there you have it, a simplified guide to house insurance. Remember, it's not just about protecting your home, it's about securing your peace of mind.